And then in today's live, we're going to talk about how to trade FOMO news. How to trade FOMO news. So when you join this live, make sure you like, you comment, and then share. Okay. So how to trade FOMO news. Um, so how to trade FOMO news. So once you joined, make sure you like, you comment. Okay. So we are waiting for some time so that the other viewers will join, and then we will start. So our topic for today is how to trade FOMO news. How to trade FOMO news. So if you are a new trader, you should know how to trade news. FOMO news are usually a high impact news. So how do you trade a high impact news? That's what we're going to talk about today. So make sure you join and then share. Okay. All right. So let's wait for about 10 minutes for our colleagues to join, and then we will start. So let's wait for us, our colleagues are joining, and then we will start. So the topic for today is how to trade FOMO news. FOMO news um, refers to high impact news. For example, CPI news, um, NFP news, and and economic and interest rate news. So any news that is about interest rates of a country, any news that's about interest rates of a country um, also have a high impact on the market. So once you wake up, you check your news, and you realize that there is an interest rate news that is coming up, there is a CPI news that is coming up, there is NFP news that is coming up. These three news constitutes the what we call the FOMO news, because their impact on the market is very huge. Their impact on the market is so huge. So if you are trading, anytime you trade, usually these news are released during the New York session from 12 in the afternoon up to 5 p.m. Usually those high impact news are released within this period. And so if you are a trader and then you are not really experienced in trading, then I will always recommend that when you check your news and then you realize that any of these news will be coming up that day, then you have to avoid trading within that period. Please, once you join, make sure you like and share. So if you are not really an experienced trader, always avoid FOMO news, the CPI news, the NFP news, and the interest rate news. These three news are the ones that has a higher impact rate on the market. So when we say FOMO news um, in trading refers to when traders entered a market because they are fear of missing a huge move. So the traders fear of missing out an entry. So usually when those news are coming up, they has a very high impact, so there is a huge spike on the market. So usually for example, especially new traders, when they come on the market and they realize that there is a huge market, there is a huge move, then they immediately will want to enter the market just because they saw maybe a huge 30 minutes candlestick that has closed bullish or bearish, and so they will want to join immediately. And don't forget that anytime there is a news, anytime there is a Fomo news, or anytime there is a CPI news or an interest rate news, because they cause a high impact on the market where they can cause a strong move, the same way they cause that strong move to the upside or to the downside, the same way they're going to cause the strong move to the opposite side as well. So if, for example, let's say an interest rate news comes out on the market now, let's say in 1:30 the news is released, there will be a spike, strong spike to the upside, and once that candlestick closes, the next candlestick can also move to the opposite direction immediately. So if you're a new trader and you don't know this, once you see this huge candlestick that has moved to your to, let's say, the upside, you might think that the market is will continue to move in that direction, and then you end up buying, which is wrong, because you don't know what has happened that's caused that spike on the market. Okay, so the term FOMO that we use in the forex market, what we are saying is that fear of missing out an entry, fear of missing out an entry. So any trader that's enter the markets because they are scared of missing out the market or an entry, is what it means, that that particular trader is what trading what we call a FOMO trader. So that particular trader becomes a FOMO trader because this person is scared of missing out an entry, and so they will want to enter the markets early, and by so doing you make a lot of mistakes. So as a professional trader, anytime there is a news coming up, your approach to the market should be different from a new trader who do not know how the market moves during a news period. And I told you these news are released usually during the New York session. If you've been losing a lot, you realize that there is a particular period in a day that almost every trader that lose an account, loses within that period, and usually it's within the New York period, New York session. The reason is that during the New York session, especially during the New York session and then the London session overlap, there is a huge momentum. There is a lot of people that are on the market at that time. So people in Africa, people in Europe, people in US are trading at that particular time. So it makes trading volume goes high. And when it happens that way, any good entry that you make a lot. The same way when you make a mistake, you make a lot. So during this New York session and then the London session overlap, there is a huge volume increases at that particular time. So if you make the right decision, you make a lot. And don't forget that this is the period where these high impact news are being released. So anybody that blow an account, usually most of the time they blow this account during the London session and then the New York session overlap. So I always advise new traders that if you start trading, avoid trading from 12 in the afternoon upward. Avoid it until the London session closes around 5 p.m. So the best time for you is maybe from 4 a.m. up to 12 p.m. During that time, that is a London session only. So it's only people in London and Africa that are trading. So the volume is very low, and then the market moves smoothly at that period. So if you are making profits within that period, you make it smoothly without stress. If you are making profit within the London section, that is, let's say from 7 a.m., around 7 a.m. in the morning to 12. Usually when you are making profit at that time, it's not really stressful because when the market is moving in your direction, it moves smoothly. So by before 12, that the New York session will also open, and then you add up to the trading volume. That one you've already made some profits. Okay, so let's continue with the FOMO news. So FOMO, as I told you, FOMO news usually comprises of a CPI news, an interest rate news, and an NFP. So these three news, anytime you wake up in the morning and check your news and you realize that any of these news will be coming up that particular day, you will have to be very careful, especially when that news is going to be released at the New York session or between during the New York session and then the London session overlap. During this period, when you are trading, you need to be very careful because the spike or the impact of those news on the market is so huge. It's so huge. So fear of missing out. Fear of missing out. Why should somebody fear of missing out? Why should somebody trade a FOMO news with some form of emotions? Now, usually during FOMO news period, when those news are released, what happens is that smart money enters the market immediately, and the same way it enters, it leaves. So big banks, international banks, institutions, they make smooth money within the shortest possible time and withdraw their profit and leave, because the market will definitely reverse again. So that you realize that when there is a news, it's two things. It's either the candle will push strong to the upside, close strongly bullish, then the next candle will push strong to the downside. It's two things. Or the candlestick will push to the upside, leave a huge wick all the way down, up again. So it's like the market itself, or that particular candle is neither bullish or bearish. So it goes up, up, spike down again, then it will, now be moving in between the wick until the candle closes. So that is the time it winds people's accounts. If your account is very small and you are using a huge lot size at that time, because the news is released, there is high volume, market spike up, spike down again within the same time frame, what is going to happen is that it's going to wipe your account out. That's why if you want to trade news, first of all, make sure your account is huge. Two, if your account is huge, then you also have to know or be mindful of the lot size you are using. If your account is, let's say you have 1,000 USD account, and then you are going to trade a FOMO news, for example CPI news or NFP news or an interest rate news, what you will have to do is that use a small lot size. It is better you make a small profit than targeting a huge profit and then a little reverses against you, wipe your account, meaning you are gambling. So if you understand it that way, that it's about growing on the forex market, not about making huge profits at the end of the day. No, it's about seeing a significant growth in your account. So always targeting, you have to target getting your entry right instead of making a certain amount. So always your entry should be right. Okay, now signs of a FOMO trading. So how would you know that you so and so you are FOMO trading, or you are scared of missing a strong move? How do you know? The first thing you should know is that when you enter the market after a huge move, okay, so for example, you open the chart and you realize, let's say you are using a 15 minutes candle, and then you open the chart, sorry, you are using a 15 minutes chart, and then as you open the chart you realize that the market has moved strongly to the upside, very huge candlestick, bullish candlesticks pushed to the upside and closed. Then immediately you think that, oh, we will continue to push to the upside, and immediately you buy the market. That is wrong. So one thing you should know, or one sign of a FOMO trader, how you know that the way you are approaching the market is you are you are trading, you are meaning, FOMO trading is that you enter the market after a strong move. That is wrong. That is wrong. So you do not have to enter the market after a very strong move. It's totally wrong because you always get it wrong. The truth is that this thing I'm about to tell you comes with experience. When market will move in your direction, the signals that you will see to enter the market does not comprises a huge move. So your entry signals does not comprises what? A huge move. Usually a medium candlesticks, either bullish or bearish, or a pattern. So you use a pattern, or you look at the candlesticks where it's forming. Usually if it's, let's say it's at the support level, and then you look at it, you realize that the previous bearish candlestick was so huge, and then the following one became a bullish one, and it's like it has closed in between the bearish candlestick that was formed. When you see that you know that, okay, then this is what you call a bullish harami. Okay, so if bullish harami is forming, then what are we expecting? We are expecting the market to be moving in the upside direction. Please, once you join, make sure you like and share. If you have any questions, just put it at the comment section, and then I will address all your questions. Okay, so usually when there is a strong move, you open the chart and you notice that the market has moved strongly to a certain direction. Be very careful of entering. You will always get it wrong, because you realize that immediately you enter, even though you realize that the market was moving bullish, and you buy, and then immediately the market starts moving to the opposite direction. When it happened that way, you are doing what? FOMO trading, meaning that you were so scared that the next candlestick will move in your direction, and so you don't want to miss that move. So immediately you enter, and once you enter, the market will begin to move in the opposite direction. So anytime you open the chart and there is a strong move, you don't enter. You wait for what? Wait, wait for a retracement. Always, if the market will continue in that direction, there will be a retracement to the downside, create a new support before the market continues to that direction. Or if there is a huge move to the downside, and the market will continue to that particular downside, it will retrace to the upside, create a new resistance, then the market will continue to the downside. So always don't enter the market after a strong move. Never. You see a 30 minutes candle close so huge, then immediately you buy the market, or immediately you sell the market. You are getting it wrong. It means that you are FOMO trading. The next thing that you know that you are FOMO trading is that you don't have a clear strategy. So you are in the haste of entering the market just because you saw the market pushing, so moving to the upside, or the market is moving to the downside. So you are in the haste of entering. So usually people without a strategy, people with low market insights, are the ones that usually does that. So that is another sign that you are FOMO trading. And if you are FOMO trading, you have to avoid that. You have to stop that. The next thing is trading because others are making money. So you want to enter the market just because people are making money. No, it does not work like that. Because your strategy, because you must have a strategy that works for you. And then your strategy might be different from those that are making their money at that particular time own. And so trying to enter the market just because maybe your friends are making some form of money is a sign that you are FOMO trading, because you are scared of what? Missing strong move. Don't do that. And also ignoring risk management. Ignoring risk management. In fact, once you are a new trader, you will always make this mistake. That's why we always try to talk about that. So why am I saying that if you are Fomo trading, one sign is that you what do you call it? You avoid risk management. The reason is that you are in a haste of entering the market, so it will not even cross your mind of um, setting even a stop loss. It will not come in mind that how much are you going to lose, or how much are you willing to lose on that particular trade. You just enter the market. When it starts moving against you, you make a huge losses. So first sign of FOMO trading is that you you enter the market after a huge move, which is wrong. So always after a huge move, wait for a retracement, let a new support create or a new resistance create before you join that particular move. And the next thing is having no strategy. So the person do not have a clear strategy for the entry. And also entering the market because others are making money is also wrong. That is a FOMO trading signs. And also ignoring risk management, ignoring or without you enter the market without asking yourself how much you are willing to lose. So always any trade entry that you make, always have it in mind that you are going to lose so and so amount, and once the market hit that particular amount, you close your entry, you close it, or it should just hit your stop loss and you wait for the next opportunity. So always make sure you check that. Now, how do professional traders trade to avoid FOMO trading? So for example, during a huge news release, how do professional traders approach the market so that they will not trade um, FOMO? Okay, so the first thing is that they plan a trade before the news. So you wake up, always as a trader, you know trading is a business. It's a business. So you wake up early in the morning, you have to check your news. What news is coming up today? What and how is the news going to impact on the market? You know that, okay, so let's say we have a CPI news coming up at, let's say, 2 p.m. You have that in mind. You have, let's say, an interest rate news coming up, let's say, at 1:30. You also have that in mind. Now, you plan your trade before the news is released. Okay, so always professional traders avoid FOMO trading by planning a trade before a news is released. And the next thing is that they wait for a pullback and confirmation. So when the news is released, there is a huge spike either to the upside or to the downside. They wait patiently as if there is nothing happening. They wait patiently for the market to pull back, create a new support or a new resistance, and then confirm it with their confirmatory candlesticks before they enter the market. So always make sure that you plan your trade before a news is released. If only you want to trade a news, then always make sure that you plan your trade before a news is released. Please, if you have any question up to this point, kindly send it at the comment section and then I'll answer you before we continue. So put all your questions there and then let me answer you before we continue. So I'm waiting for your questions. I'm waiting for your questions. So I'm waiting for your questions. Okay, so if there is no question, then we will continue. So first of all, you plan your trade before a news is released. Second, you wait for a pullback and confirmation before you enter the market. And also, professional traders, they use proper lot size. That's why I took my time and then I teach you how to calculate lot size on every account. So depending on your account, you should know the right lot size to use so that you will not expose the whole account to the market. So they use proper lot size and then stop loss and TP. Okay, and the next one is that they accept that not every move must be traded. Yeah, so sometimes when you open the chart, you see a very strong move, nicely moved, but you have to just avoid it. If it's not meeting your criteria of entry, just avoid it. And have it in mind that it's not every move, not every uptrend or downtrend you want to participate. Then the next one is a simple rule that every trader must follow. I have this simple rule that I think that if you are a trader, you must follow. So if you feel emotional, listen to this. If you feel emotional or rush to enter, please, you are probably FOMO trading. Anytime you feel in the haste of entering the market, you are FOMO trading. So don't forget that FOMO trading is, trading emotionally or trading with emotions, being in a haste of entering, you are FOMO trading and you have to be very careful. So once you open the channel, you feel like you want to enter this market immediately, close the chat, put the phone or the laptop somewhere and leave. You are going to lose money. The moment you feel in a hurry of entering the market, you are going to lose. That is a sign of what? A FOMO trading. So my simple rule is that if you feel emotional, if you feel rushed of entry, you are FOMO trading and you will have to avoid trading at that particular time. So up to this point, if you have any question, ask me and then I will respond to you. And don't forget that the daily analysis that I put on the chart, for those of you that follows it, you know how it works and you know how it's benefiting all of us. Just follow it, look at the levels. I always take my time, calculate all this resistance, support, pivot point, last price, all these things. I take my time every morning by 4 a.m. I'm awake doing those calculations for the day before I plot them on the chart and then wait patiently until the market hit those levels before I take my trade. So always make sure you follow the daily market analysis and that is going to help you. So please, if you have any question up to this point, you can ask and then I'll answer you. Always make sure you avoid FOMO trading. Very, very important. So any question? Any question? I'm waiting for your questions. Okay, so that's just a small light that I want you guys to know how to avoid FOMO trading and then how to help you guys trade like a professional trader. In my next live, I want to talk about how to trade news. How to trade news. So before how to trade news, you must know how to avoid FOMO trading. Okay, so I'll teach you how to trade news in our next live. How to trade news is what we're going to talk about in our next live. So please, if you found this live helpful, make sure you subscribe to my YouTube channel and then like and share also, and then make sure you follow the daily market analysis, and then that is going to help you see a significant growth in your account. So I'll see you, God willing, later. Bye bye. Don't forget, this is retraces. Bye bye, guys. So guys, I'll see you later.